Alright, what is going on, everybody? In this video, I'm going to break down two trades that I took on Tesla and AMD. And these two trades made me about $7,000 in profits. Now, Tesla trade was roughly about 25% returns, but it was a beautiful trade, beautiful executions, beautiful thesis. And AMD trade was three initial targets like that I had in my mind, or not targets, but three profit takings that I did was, first one was 25%, second one was 120%, then third one was 250%. What I'm going to break down in this video is the thesis behind my entries, the why I jumped in, why I got out, where did I add to my position, my trade management, my stop loss, how much money I risked, all sort of stuff. So this video is going to be fun. And if you're a little busy and you're like, I don't have time to watch the whole video, I don't know how long this video is going to be, please make sure save this video right now. Save it to watch later. Watch this when you have some time and you're sitting in front of your computer and there's nothing on your plate. Don't watch this while you're walking or driving to work or whatever. This is how to get rich. This is not the episodes of Breaking Bad. This is how to get rich. So you need to pay attention. All right. And if you do not know who I am, my name is Somesh and I'm a full-time day trader. I started trading in about 2018. I lost a bunch of money for first 14 months. Then eventually things started clicking because of all these mentors, you want to say, or all these people that I was listening to. I picked up a few things from everybody and I put it all together, started using a system that I used to be where I am. I have made a bunch of money from my trading. Now, let's see how can I help you do the same. All right. My whole point is so that you do not have to go out there and watch 50 other YouTube channels to learn the stuff that you can just learn from one channel. And this is for day traders. All right. I make this because I fucking love you. All right. Let's get it. Now, let me break down the first trade that I took, which was on Tesla. Now, when you see this Tesla's chart, what do you see? You know what I see on this Tesla? I see the uptrend in the pre-market. Now, a lot of people make this one stupid or crazy mistake. They do not take account of the pre-market action. I love watching pre-market action, the data that is leading towards the market open. You want to pay attention to that because usually there's something hidden in that data, and if you can pick up something from that data, man, you can make a bunch of money. And anything that can help you make money, why would you not use it unless you are Elon Musk, right? He can say fuck you to the advertisers. Sweet. But he got too much money. You and me, we do not have as much money as he has. So we need to use everything that we have in our possession so we can make the money. And the pre-market data is in your possession. So you need to use it so you can make money. All right. Please don't listen to those people who are like, oh, pre-market action is not important. It's there. Why wouldn't you use it? Why would these big companies lose hundreds of thousands of I don't know how much it cost them to actually put this data out. Why wouldn't they, we want to use that? I just never understood the reason. So we saw this pre-market action setting up and I'm like, okay, it looks like an uptrend. Now look at this thing. Does it not look like an uptrend to you? This is a lows. This is higher lows. This is higher lows. This is the previous lower highs. And then we made a new highs. So that means it's a higher highs. And then this one is a higher high again. Clearly it looks like an uptrend. Right? Now, in order for an uptrend to fail, what needs to happen? This is how the uptrend going. We need to break, if we hold and make a new higher low, sweet. But if we break below the previous higher low, that means we are making lower lows and then the downtrend starts. Sweet. That's how uptrend and downtrend changes. So uptrend will keep going up until we are holding the previous higher low, and the downtrend will keep going as long as we are holding the previous lower high. And here we went a downtrend. The moment we failed this downtrend, we started an uptrend. The moment we failed this, we'll start a downtrend. So I was watching this. I'm like, sweet, it looks good. Let's see what can happen, right? As soon as the market opened, it made, oh my God, look at that. Look at that candle. It made such a huge bearish candle, right? And now I'm just like, oh, jeez. Okay. Now I'm watching this trade. I'm watching Tesla towards the downside. Big reason is it broke below the pre-market low level, right? And it made such a huge bearish candle. I started watching it. And then I'm like, okay, I'm a sort of trader who likes to wait for a little pullback. I will never ever jump into a trade which has already made a huge move. That's when big people are getting out. The big money is getting out there. And you don't want to just be sitting in a trade when other people are getting out. Because when other people are getting up. Think about this for a minute, right? Other people are short. Let's say they shorted here. And shorted means they sold first and now they will buy back later. Just as simple, right? They shorted here, they will buy back later, they will keep the difference. In a better way, I will give an example of this, all right? Let's say you're the shop owner, okay? You're shopkeeper. And somebody comes in and he's like, oh, I really, really need this t-shirt. Do you sell this t-shirt at this store? And you're like, oh, I'm so sorry, we do not sell it, but we can order this for you. And he's like, oh, okay, how much are you gonna be? And you're like, okay, let me make a phone call. So you make a phone call to your people, wholesaler, and he's like, I can give it to you for $55. Okay, so that person gave you a price for $55, right? You haven't paid him yet. He's like, okay, all right, sweet. You hang up the call and you tell the customer that, oh yeah, I can sell it to you, but it's gonna cost you $100. He's like, oh, thank you so much. Here's $100. Now you do not own this t-shirt yet, but you sold it already. So you sold it, you took the money, and now you placed you made a phone call to your supplier and you're like, can I please get one? He's like, sweet. And then you paid him $55. So there was a matter of like 5 minutes where you had the $100 to yourself and then you paid $55 out. That means you get to keep the $45 for yourself. That's how short selling works. So you sell something which you do not own yet, but you expect it to come down a little bit. That's when you're going to buy back and, just make this money. All right. It just exactly as opposite of you buy first and you sell later is exactly opposite. But the thing here is when everybody has sold, price is coming down. What makes the price go up? Price goes up when people start selling their position or closing their position. When they have sold first, in order to close their position, what do they need to do? They need to buy. Let's say you are minus $200 in your bank account. You need to make it zero. What do you need to do? You need to add to this. So they are in minus right now. That's a minus 1,000 shares they own. Now they need to buy so it can become like zero. You see what I'm saying? And when they close their positions, what happens? When they close their positions, the stock prices can bounce. Why? It's the buying pressure that's coming in, right? Which is why I always, and same goes for the other side. I always want to wait for a little pullback. I never ever jump the gun. Because I know for a fact if other people started taking profits, it's going to bounce and it's going to bounce away where I will not be able to get out and I'll take a big loss. Wait, now I was on a 2-minute chart. Another thing which I think you should know is I'm a sort of trader who likes to trade on different time frames, on different time of the day. That means from 9:30 Eastern time to 10 o'clock Eastern time, I watch 2-minute chart. Okay. From 10 a.m. Eastern time to 11 a.m. Eastern time, I watch 5-minute chart. And from 11 a.m. Eastern time to rest of the day, I watch 10-minute chart. But why do I do that? I do this because there's not enough candlesticks for me to rely on a 5-minute chart from 9:30 to 10 o'clock. There's not enough data. Market just opened. There's only 5 minutes. And on a 5-minute chart, only going to give me one candle. But on a 2-minute chart, it's going to give me like 2.5 candles, which is enough for me to kind of make a decision on the trade if I'm going to take the trade or not going to take the trade. Sweet. And this is same exact reasons why I trade different time frames. Okay, it works for me. Now, let me break it down. Let me make it super easy for you so you can do the same as well. Now, price started moving lower. As I said, I want to wait for a little pullback. And then the next candle happened. It broke below my next critical level that I was watching and it went all nuts. Now I'm just thinking, I'm like, oh my God, man. Am I getting FOMO? Yes. But am I doing something about that FOMO? No. Anybody who tells you don't have emotions in trading, bro, they don't know what they're talking about. You're gonna have emotions in your trading because there's money involved in trading. There's money on the table, man. And you can't be like, oh, I don't want to have emotions. They're always gonna be emotions because there's money on the table. But good traders, the traders who've been trading for a while, they know that it's okay to have emotions, but what's not okay is to do something about their emotions. You need to ignore. I was ignoring the charts for a minute. I was like, up until we get a little pullback, I don't want to jump into this trade. There's no point for me to jump into this trade because I want to wait for a pullback. But because we broke this big critical level, I started watching for a little pullback. I'm like, maybe we might see a little pullback. That would be nice. Hey, sweet. And then we started getting a little pullback. I'm like, all right, sweet. Now, what was the thesis here? We went back and retested my critical level, right? And now I'm like, okay, it's below the pre-market low. Everything's looking nice. It's below yesterday's low. This is yesterday's low. That means there's some supply pressure sitting from, this was a previous, previous support turning into resistance. You see what I'm saying? What's happening here? And I'm like, okay, kind of think of it like, think you're on the first floor right now, right? You're on the first floor, you're sitting here, you're laying down on bed, and your wife's on the bottom, she's cleaning, whatever. And she's like, oh, can you come down? And you're like, all right. So you stood for her. This is her resistance, right? She can't just jump ahead and try to go towards the upside. That's a resistance. But for you, that's a support. But when you use the stairs, you go down, this point becomes, which was previous support for you, now becomes a resistance, which is now the roof or the ceiling, right? And that's basically what it is. This is a resistance as well. Now I'm like, okay, if it break, this will be my entry, but I'll show you, and you might be like, oh yeah, it's very easy to say. Every single day I do a screen share with my students, okay? They get to see my screen while I'm executing live, all right? And while I was doing the screen share with my students, I broke this trade down. All right, let's have a look. All right, let me put the volume up, and this is Tesla, and this is, you can see this particular day. All right, let's hear it. All right, I'm watching Tesla, I'm watching SPY. Tesla below 182, looking good for puts. 180 puts. So I said Tesla below 182 looks good for 180 puts. All right. Below 182, got below 182. All right. I just got in, yo. Like, I just got in, yo. Only did 20 contracts. So when I am doing this with my students, man, they can see this screen and they can also hear me, and I call out what contracts I'm jumping in, all sort of stuff, like how many contracts I did. If I tell you how many contracts I did, that kind of tells you like, oh, how confident he is in the position. Sometimes I do 50 contracts, 100 contracts, and they know I'm very confident in this trade, right? And this is the best way to learn the strategies that I teach them. Otherwise, I teach them the strategies, and then you literally can see me trade those strategies in the real time and get to the next level, right? And look at this. Yeah, 1.49, only did 20. I told what price I got filled at, 1.49. I only did 20. We can head down to 181.15. We can head down to 181.15. All right, let's see. Nice. Keep going. Keep going. Oh man, it's coming down. Nice. Look at that. Yo, this went nuts. All right, hit the profit target, I think. Oh my God, this is so crazy. All right, guys, congratulations. That's 20%, over 20%, yo. Beautiful. Feel free to take a little bit off right here. So it's over 20%. It was about 25%. I'm like, feel free to take a little bit off. We have 181 critical level, 181.1 critical level. Feel free to take a little bit off. If this breaks, 180 can be next. That's 20. You see what I'm saying? So I'm breaking down my entry. They can see my screen. They can jump in the trade with me. And this is exactly what I did. Look at this. That's exactly what I did. That's exactly how I made money on this trade on Tesla. And I started taking some profits here. And I sold my contracts fully because then it was a lot of volume. Hey, this was a lot of volume. The next candle started pulling back heavy, and I sold my contracts that I was holding as runners. But this was an insane trade, as you saw the recordings, live recordings, right? And this is absolutely insane trade. Now the second trade that I took was on AMD. AMD was rough again. I break down the thesis, why, and all sort of stuff. Now, for AMD trade was, as I said, first profit taking 25%, 120%, 250%, but there was one thing that I used, which is a little different. I used the Fibonacci levels to kind of find my entry point, and I'll break this down for you so you understand, so you can do the same as well. All right, now, AMD, wasn't the one of those names that I was watching as soon as the market opened, but I started watching AMD because the trend was super freaking nice. We broke above the pre-market high with so much volume and such a huge freaking candle. And I'm just like, oh my God, I need a little pullback. If it gives me a little pullback, this would be insane. But guess what? it didn't give me any pullback. It did a little bit, but I never got in. Why I never got in? Because I was waiting for a candle to close. And it started picking up towards the upside. And now this is exactly roughly where I started watching this very closely, right? Why? Because a couple of days ago, we had a little tough point around this 159.2 level. Look at this. Stock trended towards the upside from all the way down of 154 towards the upside of 159.2, and it got rejected there, right? And the next day we went down again. So clearly that level was important, and we broke above the level like nothing. So I'm like, oh my god, man, only if it gives me a little pullback I would be super interested, right? And there's another thing called confluence. Confluence is when there's more than one reason for you to jump into a trade. So I was watching, the first reason that I was watching this trade was the trend. Trend was super freaking strong. Second reason I started watching was because I'm looking for a retest of the critical level that it just broke. And the third reason is, which I'll tell you, which is Fibonacci's, and I'll tell you how to use them and how I used it to make this money. So wait, let's break it down. Now, I'm watching this AMD. I'm like, oh my god, AMD looks good. And now I'm waiting for a little pullback. AMD started giving me a little pullback. Now, what I did when I saw this one critical pullback, I'm like, I need some reason to jump in. I need a thesis. I need a confluence. Where would I find the confluence? I found the confluence from the Fibonacci. So how to use the Fibonacci's when we have such a huge trend, like such a straight line trend? What you need to do is drop the Fibonacci at the lowest point of the day. So lowest point of intraday action. I dropped the Fibonacci point right there, and I pulled it all the way up towards the highest point available so far. And these 2 points on my charts that you can see, 0.236 level and 0.382 level, are the 2 points which are super critical levels that you need to watch. If the stock is super strong, it will bounce off the 0.236 level. All right. Now, I was watching this and it started bouncing off this. I'm like, oh my god, this looks good. This really looks good, because the Fibonacci is telling me this looks good. And Fibonacci, what's Fibonacci? Fibonacci is algorithmic numbers and, you know, all sort of stuff. It's much science. You can go literally read something article from YouTube if you want to, but I'm just telling you it's to be used when the trend is super nice and it's given a little pullback. You can use the Fibonacci levels for finding a move towards the upside. Now, I started watching this. All right, I'll show you the video so you don't think that I'm just like talking crap. All right, this is AMD. Look at the time. All right, this is the AMD chart right here, and this is the screen that my students see. AMD, if I do calls, I'm gonna do 160 calls for. See, if I'm watching AMD and if I do AMD calls, I'm doing 160 calls. AMD above 159.5. So what did I say? I'm watching AMD above 159.5 for 160 calls. Amazon, if I do Amazon above 184.9, I will Amazon do 185. But AMD started moving. AMD still holding the level, and I'm like, oh my god, this looks super nice, right? Look at this. AMD looks super nice. Let's see what happens. All right, fast forward it. Coming up. All right. Watching AMD. I started breaking, and I'm like, oh my god. Come on, 0.5. All right, 0.5, trying to break. All right, I'm watching. All right, I got in just then, yo. All right, I got in. $2 is my fill price. $2 is my fill price. AMD. Look at that. I also say how many contracts that I think I should say. I normally do. I don't know. I started moving. Let's see if AMD is at high of the day already. AMD gets to 160. 160 should be nice. All right, started moving. Broke the previous half of the day. 160 approaching, and the contracts are paying. Come on, break the 160 now. Oh my god, man, this is so fun. Alright guys, that's 10% already. Over 10%, yo. Nice. You can see. If you take a little bit off it. Yeah, take a little. So just so you know that I actually take these trades. I'm not just saying it. Just don't say it for a video. I actually take these trades just to prove the point. All right. Now, AMD, I took this trade. As I said, there was three reasons for me to take this trade. And it started moving towards the upside. 160 hit first, right? I'm like, oh my god, this is insane, right? 160 hit. I took a little bit off, but didn't take much off. It started moving towards the upside. Then 161 was the next level. Then 161 broke. We pushed towards the upside. I'm like, oh my god, this is absolutely insane. You see what I'm saying? I was up heavy now at this point. But again, it went to 162. It started having a little pullback. Now, what do you need to do with the Fibonacci's? The bottom is still sitting at the same point. I literally picked this point. I placed it the highest point available so far. And I told myself, if it came down and retested this 160.67 level, which is 0.236 level on my charts from the Fibonacci's, I am about to go long. Why? 161 was a critical level. It broke. It will kind of be retesting that critical level as well. So I'm like, sweet, this looks good. And again, confluence of 161 critical level, confluence of the Fibonacci level, and also the trend has been ultra strong. And clearly you can see that AMD has some legs. It can run. It has some legs today. It already made a huge move already. Why can't I make a big move again? Right? So it started coming down. It literally tapped that 160.67 level. It tapped that level, and what happened? It started bouncing towards the upside. What happened? I am in the trade. I added more about here because why not? Right? And then up until 10 o'clock, as I said, up until 10 o'clock, I watch 2-minute charts, and then I switched my time frame to 5-minute chart. I went on a 5-minute chart and I'm looking again. I started getting a little pullback. Hey, mind me not, my entry point, I'm up heavy already. But I grabbed my Fibonacci's, I just put it towards the upside. I'm like, this is strong, man. All right, this is strong. I'll see if it gives me another entry. I'll add more. Why wouldn't you add to your winner? People add to their losers. You want to do what literally, hey, you can understand, about 95% of traders lose money. They add to their losers. In order to become a winner, you got to do what this 95% people don't do, which is they don't add to their winners. They take profits too quick and they let their losers run. What do you need to do? You need to let your runners run, and you need to add money to your winners. And I'm just like, all right, I'll add more. It started coming down. What did I say? Again, critical levels, super important on your charts. I was watching this. I would have added here. Even if I would have added here, I would not be losing big time money. The reason why? The reason is super simple. The reason is because my entry point is insanely good. Because I added ultra early in the day, right? And also I would not add up until the previous high of the candle breaks towards the upside. That's just me. Okay, so I was watching this. Now I'm watching this particular level with this like kind of a stop loss right here, right? You get the point? All right, so let's see what happens next candle. And it kind of held between this. I'm like, sweet, no problem. Then we broke this entry level. I got in. What do I have to lose? I know my stop loss. Even if it hits the stop loss right now, I would still take about 120, 150% returns on the contracts. The contracts were like, I had entered at $2 and the contracts were trading at like fucking $5, I think, at this stage. Insane, right? And then stock started moving towards the upside. I'm like, okay, if it breaks high of the day, it has some legs. It can go, it can push. It broke high of the day. It started pushing. Now, did you see how I used the Fibonacci levels like clearly whole day I used the Fibonacci's? There was 8 exponential moving average bounce. There was a VWAP sitting around there. There was a 161 level sitting around there. Again, there's ultimate confluence. Confluence is what makes you money. When you have more than one reason for you to jump into a trade, that's what makes you money. See what I'm saying? AMD started pushing towards the upside. Sweet. And I think I started taking some profits around this 165 level because I was just like, oh my God, I am very happy with my profits. And I took some profits. I had my runners running with a break-even stop loss. So for example, let's say if my all add-ins and everything, my average became like $3.20 and the contracts right now are trading at like, let's say $7. I was like, okay, I'm walking away because I literally walked away. And I'm like, I'm walking away. But if this price hit on the contract up in the system, I put a stop loss. I put a stop loss that sell my options that I'm holding on AMD at the break-even price or at the price of 3.2. So if 3.2 hits, I'll jump out. Or if I come back an hour later and I made a big move and it's sitting at $12, I would take profits as well, right? Whatever it is, I already took a big chunk of my profits and my runners were literally holding at this stage. And it started giving a little pullback. Done. I think I actually exited a little bit early. But this was a trade. I hope you learned a thing or two. I hope you picked up a thing or two, because we broke down the Fibonacci's, we broke down the entries, exits, and this was a 250% return from the original entry. Like, if you do not know what 250% return means, you know what 250% return means? That means if your position size was $1,000, just 1,000, you made 250% returns. Or I'll give you best example. If your position size was $200, those $200 turned into $700. That means $500 profit on 200 position size. You do the math. If your position size was 1,000, you do the math. You do the numbers. On 200 position size, you made 500 profit. Insane, right? And that's the power of holding your runners. That's the power of literally letting your runners run. That's a power that we have as traders to make the freaking cash. And that's how we get rich, you know? See what I'm saying? So let me know in the comments down below if you enjoy these breakdowns, because I actually broke down a lot of stuff in this video, and I know it might be a little overwhelming, so you might have to watch the video one more time. If you do watch the video one more time, it will actually stick in your brain a little bit longer. I actually did the study that if you read the same thing over and over again, the retention in your brain, the holding power in your brain increases by like, I think 30 something X. It was insane. I'm like, oh my God, this makes so much sense. And I also, you know, showed you the actual, I'm not joking, yo. I held this whole time. My trades. I actually started exiting around, hang on, let me find, if I can find it. I think around 10:54 I started going, because I was looking at the bigger time frame on AMD, and I was like, I'm gonna sell soon.
Minutes chart, and right now AMD is sitting about 250%, $5 a contract. I personally think, Rishabh,
so basically, roughly around here, I did the analysis, and I was like, oh man, it might go, but, you know, set your stop loss break even. What's that? You know, we can't get hurt. And that was around this 10:50-ish, roughly around here when I was doing the analysis, and that's exactly happened to be the top. So subscribe to the channel. If you want to learn more of my strategies, check out the link, the first link in the description box below. And let's go and let's get rich. You got this. All right, I'll see you in another one. Peace.